TJ, the Wheel Drill coming at you live. It is Tuesday, June the 17th, 10:02 a.m. Central Time, Texas time. And we back, baby. We back from vacation. Uzi, we went over to Turks and Caicos. We were meant to be there for 5 nights. We extended it an extra night because we were going to spend the weekend in San Antonio. And we're like, well, we'd rather spend one extra day in San Antonio and one extra day in Turks and Caicos. Do the math, right?
No doubt. Nice time down there. Never been there, but I've heard good things about it.
The water's like clear, dude. It's like clear. I overcame a big fear that I have of getting in the ocean and hanging inside the ocean. I probably spent maybe 3 to 4 hours total inside the water. I am sunburnt. Like I'm peeling everywhere, shedding skin like a snake right now.
And you don't feel it when you're in the ocean. You know what I'm saying? You're busy and you don't feel it. You're all wet.
Yeah, I'm not a water person, so I didn't know that being in the ocean is like a magnifying glass, and the sun is just beating down on you from all angles. Dude, I looked like a damn lobster when I got out of there, bro. And I had been putting the SPF because they have all the little bottles there at all these little places, and I was just like, putting it on. It was all white. I wasn't even like rubbing it in all crazy. And I was just like, yeah, I think I'll be all right. And dude, the first day, not a big deal. The second day, I was like I said, we went laid out like 3 or 4 times. And the last couple of times I couldn't even enjoy it. I was so burnt already. And then it hurts whenever you put clothes on, right? Like when you put a shirt on or whatever.
You feel like you're gonna rip.
Dude, I was like, dude, it felt like somebody was just taking their and I was just like, shit, man.
Yeah.
But it was good, dude. It felt really, really good to unplug. I didn't do any FaceTimes. I didn't go live or anything of the sort, as you guys know, while I was over there. And it felt really, really good to be like, dude, I know how to sell puts. I know how to sell calls. I know how to roll when it makes dollars and cents. And I have this channel because it's kind of like a live class for everyone, right? Like, hey, this is what I got going on live. These are the trades that I'm in, but I'm not pumping a course. I'm not pumping anything. So I feel like I have to constantly be on that. I don't have to like be searching for content. I don't need for Iran and Israel to act a fool for my channel to thrive, because I came to this realization, Uzi, I don't give a shit that much about YouTube. I don't care that much about trying to be famous. I just want to get really, really good at my craft. And if somehow YouTube channel grows because of that, awesome. If it doesn't, well, I rock with the people that rock with me. You know what I'm saying? But I'm not trying to like figure out this secret sauce to grow this channel to like 100,000 subscribers or anything like that, because that's like a whole different business.
You're right, and it takes a lot, and to maintain that would take you away probably from family and doing what you do, which is bringing in all that premium.
Yeah, so there's the thing. There's a difference. There's people that are really good at YouTube. I'm really good at selling options. I'm not going to do it live on YouTube, if that makes sense. But I'm not a YouTuber per se. Like, I'm not like looking for any little things that I could talk about and like, oh, it's an emergency session. I got to go live. Watch this now. Don't say I didn't warn you, and all these other stupid fucking thumbnails that I see on a regular basis that come across my feed. And I'm like, dude, that's just not who I want to be. Because if we had to just draw a line in the sand, I feel like they'd rather be me than me be them.
That's a very good point.
That we're able to live. Yep. Look at the life that we're able to lead, right? So versus like, oh shit, I gotta like come up with some bullshit about like, what am I going to talk about today? But anyway, I want to show you all the spreadsheet because I got everything. It's easier on the spreadsheet because it's I could the percentages as far as like zooming in and whatnot. and then we'll go over to the Tasty Trade platform and show you the 3 or 4 key positions that I want to talk about today. I want to talk about Enphase, because obviously Enphase took a dive yesterday because potentially the solar, I don't know, the rewards or whatever, the incentives that they're giving away could be phased out eventually with this big, beautiful bill. So that's definitely one that's noteworthy that I want to talk about, show you how I'm navigating that particular position. Because a lot of times you're going to sell cash secured puts, you're going to sell covered calls, and there's going to be a big swing in either direction. And that's a real good teaching moment, because it's going to challenge you immediately, not just financially, but it's going to challenge you psychologically and emotionally. And that's the art form, right, of this whole thing. Selling options is easy, guys. Like, selling options is easy. The art is in the management, and Uzi can attest.
100%. 100%.
The art is in the management. How are you going to manage if X happens? Because it's real easy to draw it out on paper. It's real easy to do the journal entry. If this happens, I'm going to do that. But until you're actually in that fire, until you're in that pressure, this is where diamonds are created, right? Right. Then you're going to really know how much you like or don't like that stock. Because this is my goals for y'all today. Are you ready, Uzi? This is goals.
I'm ready, man. Yeah, I'm ready. Let's do it.
It's really easy to love a stock and an option when it's out of the money.
Yeah, you're right. You're right. It's like, yeah, you're walking around feeling good. You're checking your shoes are shining, and you look around. Next thing you know, you're like, wait a second, man.
It is really easy to love an option position or an underlying when it's out of the money. Meaning, if it was expiration Friday, you don't have to buy anything, you don't have to sell anything. That's a real easy place to be. Yep. But if you are in the money, meaning that you would be forced, you would be contractually obligated to buy or sell something, then that's when you realize, hey, I'm only in this thing because of the price action. I'm not really in it because of the underlying. So that's why selling options is a hell of a lot easier when you're choosing underlyings that you legit believe in.
100%. Yep.
And that's the thing. So let's get into it. Let me see here if I remember how to present this bad boy. There we go. Big tasty. You guys see that? Super. Okay, so let's get into it. So what do we have here? We have covered strangle. I guess if I make this a little bit bigger, there we go. It'll tell me what stock it is. So let's start with CleanSpark. What do we got with CleanSpark? There is short puts at 250. I'm sorry, there's 250 of them. Short puts at $8 strike and $11 strike. I call these sweet spot trades. The neat thing about CleanSpark is it is actually a covered strangle. It is not a short strangle. So I need to fix that first of all. Oh, it does say covered strangle already. So what's the difference between a covered strangle and a short strangle? Whenever you sell a short put and a short call, it means that you don't own the underlying yet. Whenever you own the shares and you sell calls against those shares, and then you have an obligation to buy more shares via a cash secured put or a short put, that becomes a covered strangle because you're already covered. You don't have any risk to the upside. You have risk as far as you cap your upside, but you don't have an unlimited risk to the upside. If the stock goes to $1,000 a share and you're trading a $10 stock, and there's like the MOAS, right, the mother of all short squeezes, it wouldn't matter to you, aside from the fact that you left a bunch of money on the table, but you're already able to contractually deliver the share. So that's like the key difference between the short strangle and the covered strangle. So CleanSpark is a pretty easy position to navigate. I did double down though, and I'll talk about the shares that I own as well, because there are some shares owned in this account now. Enphase, we're going to talk about this one in a little bit, but I'm going to save it. We have short puts at 40, and we have short calls at 45. Now here it says cash secured puts and covered calls. That's just because of the way that Troy set this thing up for the formulas or whatever. But these are short puts and short calls. These were sitting at 55 and 60. Uzi, I rolled those down to 45, kept the same expiration date, brought in 45 $48,000 more of credit. And
Nice.
I just looked at it and I'm like, at $40, I'm not going to do anything probably for another couple of weeks because I'm kind of okay taking ownership at $40 and I'll just sell calls at $40. But it's a huge obligation. It is 50,000 shares. So there's an obligation to buy $2 million worth of Enphase at $40. So that is where you got to do a checkup from the neck up. I've researched this company a lot. I've done a couple of podcasts about this company with Carlos and Vitali back in the day. And I was excited about Enphase at 140 a couple of years.
Yep.
And now I'm like, okay, same company at 40. I feel like I can manufacture the win here. And it's a really, really big bet. That's the thing. But again, everybody has to do what makes sense for them. So I'm like, dude, if I wasn't that freaked out at 140, I'm certainly not going to be freaked out at $40. And there's plenty of cash in the portfolio to support this decision to just go ahead and take ownership. Now, that being said, I'm not saying that I will take ownership, but I'm in a position to do so. If there's an opportunity, if I could just ride this trade out another 20, 30 days, and then I can roll it out to say from 40 to 35, now I would be a lot more excited because why in the hell would I want to pay 40 when I can scoop them up for 35? Because in the open market, according to the spreadsheet, you can get them for 33.67. So we'll talk about that whenever we get to the actual, to the brokerage. Palantir short strangle. This one was sitting at 110 and 150 when I started, and now we're at 120 and 150. Why? Palantir's kept itching up. So I haven't done anything with the short call, but I've strategically rolled up the short put more credits so I could be a little bit more delta neutral, if you will. And then Riot, it's a covered strangle. This means we own the shares and we're sitting at 9 on the puts, 10 on the calls, and we're actually up to 50,000 shares of Riot, and we have 50,000 shares of Clean Spark as well. So I've added some shares while we were on vacation. SoFi, we got a massive strangle going on. We've got 3,000 short puts at 13. These were sitting at 12. I rolled them up from 12 to 13, got a lot of credit for doing that. And then I've got the short calls at 16 a month from now. So that's what's going on with SoFi. I want to try to stay in this trade another week or two, and then I want to roll from 16 to 17, possibly even 18, because I feel like SoFi does have some tailwinds finally. So I do feel like SoFi is going to easily be $20 by the end of the year, possibly 25. So I don't want to get caught being too cute over here at 16. I'd be a lot more comfortable with the 17 or 18 handle on these short calls. But again, the conviction is very, very high for me on SoFi. So I don't have to fight these calls. If things get out of hand, I would just buy the damn shares and I could deliver the shares and I can move on and call life good. And that's the beauty of the short strangle, is if you have the conviction and you have the capital and you can easily cover and turn it into a covered strangle, you eliminate a lot of that risk to the upside. And then now the risk becomes to the downside because, the shares could go to zero. Theoretically, it's very unlikely in the case of SoFi, but theoretically, mathematically, that could happen. That is a possibility. Very unlikely, but it's a possibility nonetheless. Soxel short strangles. The put is at 20. The call is at 26. It's sitting at 22. So that's the sweet spot. Tesla, a lot going on in Tesla. We've got short puts at 300 for 718. Short calls at 420 for 718. 100 of them now. So I've added 50 of them since we were on vacation. Picked up a lot of credits. It was just insurance because I felt like there was a technical breakdown on Tesla, Uzi, that we'll talk about. I felt like 295 was kind of like the line in the sand when I looked at it while I was on vacation. And I was like, dude, if this thing were to go below 295, it does not look good to me, but I'll defer more to you when we get to that, Uzi. And then I've got in the distance next June at $300, a lot of contracts on the short puts. And then I've got the massive short call position at 470 for the beginning of the next year. And then I've got the leaps that are underwater. Got the 450 leaps, year and a half from now at 115, 450 strike. And then I've got TSLL. This is actually a short strangle now, so I got to fix that. This is actually a covered strangle because we own the shares on TSLL. So I just want to fix that real quick. And I've gotten up to 50,000 shares of TSLL as well. So we go over to the open shares, you'll see that. So on CleanSpark, there is 50,000 shares owned at an average cost of $9.18. So down a little bit on those shares. So I'll put this in red. On Riot, there is 50,000 shares owned at $9.03 average cost. They're currently trading at $9.68, so up 32,000 on those. The Tesla Leaps down about 400,000 or so. So I got to adjust what those Leaps are going for right now. They're probably going for about $70 there. So that'll adjust it. And then the TSLL shares, 50,000 shares at 1208. Those are currently trading at 1245. So paid 604,000 for the shares. They're currently going for 622. So the open P&L is 18,500. So I'm down collectively on the long positions because I'm down on the Leaps of Tesla, essentially. And then this is the net liquidation value of the account's about 12 million. And total deposits since I moved over to the Tasty Trade platform is $1.5 million. So that has happened. So that is what's going on with the positions in a nutshell, Uzi. If you want to just kind of like talk to the audience and let them know what you've been dealing with while I set up the brokerage and stuff, like what, how have you been playing the market since I've been?
Yeah, sure. Go right ahead. So we are mainly premium sellers, but we've been taking on some new strategy. Well, not new strategies, just incorporating some different types of strategies lately. We've been actually following a little bit of the unusual options activity. So while there sometimes aren't great opportunities to just sell cash secured puts and do some of the other premium selling, to try to bring in extra profits and revenue, we've been taking some trades now. They're a little bit more on the speculative side, and they're more long. They're long. Usually we'll try to finance that long though by selling something to pay for it. So if we're going to, let's say, follow some action on a stock and buy some calls, we're going to sell puts to finance that. So it's almost a free trade. Sometimes it's a small debit, but we've been incorporating that lately, and we're doing pretty good with that. We've closed, I think, 3 winners, 3 for 3. About to close another one, I think, today soon. We actually opened the trade yesterday in Enphase, which is taking a lot of heat with you and everyone else who's in Enphase. We did a put condor. It was a ratio condor. So we bought a put debit spread, but we sold 2 puts at the end of that, and then we sold another put credit spread. It's somewhat of it's definitely a higher complicated strategy trade where we did a put ratio spread, and then we sold an additional put credit spread ratioed. So we're at strikes of 40 and 38. So our average is going to be 39 if we have to get it signed, and we took in a premium, and then by selling a portion of the put ratio spread, which we will if the price doesn't get back over 40, we're going to be able to now bring in extra premium from that put debit spread. So we're in Enphase with you, and we're just doing what we do. We sell credit spreads. We do jade lizards. We've been very active, actually, very active. But definitely a few of them are taking some heat. We're in Hood. We're short Hood, believe it or not. I'm short ABGO, believe it or not. So a couple of trades are definitely, keeping me awake at night. I'm not trading half the size of you, of course, but enough that it affects, me, because I don't want my members to lose any money. And, my account suffers when the trade doesn't work. So a couple of shorts that I'd like to see come down, like Hood today and ABGO. But other than that, we're doing pretty good. Hanging in there.
Is there a stock that surprises you? Because every time I log on to the account, which is about 3 times a day, as soon as the market opens, I typically like to look around 11, 12 a.m. or 12 around noon, because that's when the market kind of takes a breather in my mind, and then power out. So those are the three times that I tend to glance at the portfolio when I'm not in front of the screen doing FaceTimes all day, right?
Mhm.
Every time I log on, there seems to be one stock that really surprises me, and that's Palantir.
Yeah, it's an
I
animal.
cannot believe where it's trading. I saw this chart, this screen chart, and it said net income for Palantir was like $500 million, right? 570 million. The net income for United Health was 22 billion. 22 billion with the B.
Crazy, right?
But the market cap for Palantir is higher than United Health. I was like, hold the phone, pump the brakes, hold the phone. This cannot be true.
Yeah, and
So we
that's
got
the
one
cynical market,
company.
right?
So we got one company with Beetlejuice as the CEO, real cool hair, smart guy, Dr. Alex Carr. I call him he's got the Beetlejuice hair, and probably one of the smartest guys on the planet. Very charismatic.
Yep.
Bangs the table like a 12-year-old when he's trying to get his point across. Love him, absolutely love the guy. Never met him. Uh, but he's got a company that's making about $500 million a year, a little over. Okay.
Yep.
And then there's another big ass company that mathematically cannot go out of business in our lifetimes, Uzi, that is doing 22 billion in net income, but yet the $570 million company is worth more than the company making 22 billion with a B. I'm like, bro, like, yeah, have you ever seen those memes? Like, bruh, like I just don't
Yeah.
get it. I don't get it, but I'm selling strangles on Palantir because the premiums are really, really juicy. But I have absolute zero interest in owning Palantir at these levels. I mean, you got to shave like literally to get me halfway interested, probably about $50 or $60 off of the Palantir share price, just to get me intrigued as far as share ownership goes.
Yeah, what's crazy is the market will do, and again, it always does this. The market is definitely an irrational animal, and it does it since the beginning of time. It will overprice something that is shiny and has potential to be more in the future, rather than a tried and true, steady, whether it's a dividend stock or what they used to call blue chip. Back in the day, we used to have blue chip stocks, which were like GM, U.S. Steel, Johnson and Johnson, companies that, like you said, can't go out of business, won't go out of business, but because they're not alluring and they're not all lit up in neon signs, and they're just steady Freddy type stocks. They don't want to and they don't get overpriced. But the minute you bring in a guy, like you said, a guy who looks like Beetlejuice and has definitely what's the word, a disruptive, he disrupts the industry. That stock is going to get a ridiculous price, and it could stay that way for a while, right? Just like the craze back in the 1700s, when the stock market opened up. They were, before the market, they were trading tulips. Tulips were given a value that was astronomical, and they'll do it with anything, any name. And
let's get into it. Let's get into it, Uzi, so we can talk some technicals, because I've got FaceTimes, I think, starting at 11:30. Let me check. I think my first one's at 11:30. Let me 11:30. And then I've got another one right after that. And then
gotcha. Cool.
So let's get into it. We're just going to focus on the future. Actually, let's talk about my son's account real quick. I went all in on Palantir. I went all in on Palantir. I went all in on Riot. Why? Because it is just a company that offers enough premiums, and I'm a lot more confident in it. I've studied the company through and through. I believe in their mission. I believe in their pivot from not just doing Bitcoin mining, but also having that HPC AI play that they're really building towards. They're like going all in on this thing. I really love that it's a two-pronged approach versus just only Bitcoin, because Bitcoin is very capital intensive as far as the mining, because you got to constantly upgrade the miners and all this other stuff. So we got 4,000 shares at $7.64 in the little account. And that part's doing extremely well. And then I'm running a covered strangle here. So there's 40 short puts at $9, and then there's 40 covered calls, not short calls, covered calls, because they're covered by the 4,000 shares at $10, 31 days out. So the sweet spot is 9 to 10, and it is in that sweet spot. So stand to collect all of those, or not just collect, already collected. Stand to capture all of those premiums the way the crow flies right now. And then this would just be a rinse and repeat trade. The options buying power is 19,000. The stock buying power is 39,000. You'll see that this is the only account where the options buying power and the stock buying power doesn't match. Why is that? Is because portfolio margin isn't available on an account that is under $175,000. In order to qualify for portfolio margin, the way that the other accounts on top are qualified, it is simply because those accounts are over $175,000 in value, for those of y'all that might be curious. So that is how I'm playing that account, and I think that I can rock with Riot and eventually maybe get to 5,000 shares potentially, and grow this account to $100,000. The net liquidation value, as you guys see there, is $73,000 or so. So that is what's going on in a nutshell, Uzi. So now what I want to do is looks like Uzi just came back. So now what I want to do, Uzi, is I want to focus in on a couple of the positions. And then let's really see what the charts have to say, if you will. Let me just change the settings here because we're going to have to get into more private stuff here.
Mm-hmm.
So, because I never know if there's bad actors out there or whatever they're called, right? Hold on 1 second. See if I can figure out how to do this. I'm rusty, man. I haven't had to do this shit in a little while.
Yeah.
You know what I mean?
Welcome, everybody. If you have any questions, start to post them out there, because
Here we go. So I think I figured this out. So let's get into it. Now we're going to go to the featured account. If I could get it together over here with you. So here we go. So there, y'all see the kaleidoscope action, right?
Yeah.
Okay, awesome. So then now you should be seeing the positions. And now I'm going to dig into it. So now what we have here is the actual positions. There's all of them, but we're going to close it all up and we're going to focus on a couple of featured ones. And I think we should start with Enphase, right? Because Enphase, I think it's either Dallas or Option. I'm not sure which one. I want to lean towards Dallas because it sounds like something that he would come up with. He calls it poop phase because it's always shit in the bed. So that's why we have that little toilet bowl and Enphase on it, because Enphase just keeps dropping turds. You know what I mean? So we've got 500 short puts at $40 and 500 short calls at 45. No shares owned yet on Enphase. I do believe that Enphase will find a bottom with the 3 in front of it. That is what I believe. But that being said, if you really look at this stock fundamentally, it's hard to say like, oh, it's like super, super cheap here. It's a lot cheaper than it was, right. But the growth is diminished. There's a lot of pressure on this sector. We all know that Captain Orange, the Donald, he's not real big on solar. We've known all of these things already. And then now they have this bill that's basically saying, hey, we're going to take the incentives potentially from solar and move them over to nuclear and whatever, right? That's going to be like the new hot girl in town. So you got to know what you're up against with this type of thing. So that being said, this is not a position that I would advise for a lot of people if you don't have the nerve to be in the fire, right? To be in the pressure. There's probably easier places to make money, is what I'm trying to say. But I believe in this play. I believe that solar is going to be a staple, but it might take 5, 10, 15 years. It might take the right administration to push that narrative forward, if that makes sense. And a lot of awareness and a lot of education and all of that stuff. And I do love the leadership at Enphase. I love the fundamentals at Enphase. I love the financials at Enphase. I feel like mathematically, this company is not going to go out of business. So that's like the very first thing that I look at whenever I'm dealing with the company, Uzi, is I'm like, can the company go out of business? And I don't see that happening. So that's a real good start for me. Does the company know how to make money? This company has been, it reminds me of SoFi and like when they took student loans away and stuff. So this company's been dealing with it for a couple of years and they've shown that they're a pretty creative company as well. So I like that about them also. So that being said, we're sitting at 40 on the puts and 45 on the calls. What I'd like you to do is pull up your chart and tell me about the supply zone and the demand zone, because I glanced at these charts last night when I saw that it tanked after hours, because we were on easy street in this position until after the bell rang yesterday. And I felt like that $35 level was extremely critical for Enphase, and it's already given that up. I think it's gone as low as like 33 bucks or so. Yep. It started trading today. But what are the charts telling you? Can we
yeah, let me start to share the screen. I'm plotting your strikes on the map, on the chart. 45 and 40.
Correct.
All right.
45 and 40, because I'm saying I'm okay taking ownership at 40, but I would much rather, I would prefer to take ownership at 35. But that would require another roll. So I have to be able to stay in this trade for another 2 or 3 weeks to be able to roll for a credit and go from 40 to 35 on the put, because it's all about time and money, right? Those are the two main components of the contract. So what is going on here with all the squiggly lines? Talk to us, Uzi.
Let me just get my no. I just knocked the computer off my arm. Hang on. Problems in the headquarters here. In a second. Of course, right? I start to move things around. Jesus Christmas. All right. Well, here we go. All right. Can you see my monitor at all?
Yes, I can see. Yeah.
So squiggly lines. Let's start first and foremost. Up above in orange, we have the 200-day moving average. So we're well below that. We can see that.
This is a falling knife if we've ever seen one.
What's that?
It's a falling knife if I've ever seen one.
Yep, it is. Now below that, you have the yellow dotted line. That's the 50-day moving average. So if you can see, most recently, right before this gap, price was touching and kissing the 50-day. When I was looking at it for a trade for my group, I was saying, you know what? It looks like it maybe can get through the 50-day, or if not, it's going to hover in that area. Maybe it'll fall back a little bit and pull back. But we got the news we got, and then it just collapsed. I'm going to go over the trend lines in a second. But so far, we're looking at the moving averages first. 200-day moving average, 50-day moving average below those, which is the 8 and the 21 that I look at, which was a good sign. That can usually indicate that the trend is starting to now go sideways to up. But that gets blown out of the water with today's move. Now, let's look back for a little while. Let's look to the left here. We can see that price was very comfortable following these two trend lines. Every time it came up to this above this top one, it was respecting it, kissing it, and touching, coming back down to the lower trend line. Multiple touch points on each one of them. So it was in a channel until it broke down through it here, but it regained it, kind of was, toying with it, but holding it and respecting it. Anytime you get like this kind of a move, it's trying to make up its mind. Should I stay back in the channel, or is this channel over and done with? But the channel was valid because it got back in it and stayed there until we had the gap down here. I don't know the news there. But while it's doing these moves out of the previous channel here, this longer term channel, it was creating a new trend line. So we touched this area here, and that became a new trend line. And look what's pretty cool about trend lines for those that don't really believe in them. Look where today landed. So today's gap down landed exactly, well, I shouldn't say when it opened. It opened up and then traded down to the exact point where it should have, according to this trend line. So I believe right now we're good on the low end of things, right? And the candle that's in the making today is potentially could be a hammer candle, and maybe we'll see it start to drift back, to that 40 level. But from trend line perspective, this is a good sign. It held the trend line that was intact when these two touch points were created. Okay, we're bouncing off that. We also went outside of the Bollinger Bands here. As you can see, they're going to light up a little bit darker in red when I hover over them. So the Bollinger Bands were also containing it until today, but it's looking like it's going to fight its way back into within the Bollinger Bands, and that would be good, because if it can rally back to the midpoint of the Bollinger Bands, that would bring it to about the 42, 43 level. That's good for you and good for us, because we're short at 40 and we're short at 38. Mm-hmm. So yeah, from a technical perspective, I think for now the lows are in. I mean, what worse could come out now? If the bill, by the way, I don't think the bill is canceled, but I think they're talking about it. So that's the news, right? So if they decide to modify it, maybe they'll modify the numbers. Who knows what's really going to happen? But I think it was an overreaction to how far they brought it down to 33.01, like you said, 33 area. Okay, so just like, stocks go too high when they get good news, sometimes they go too low when they have negative news. And I think that's the case here. Now, it might take its time drifting up back to that 40 and 45 level. So for you, I think you're safe. And for us, we have to. We're just going to roll the 40 and the 38, down if we can. If not, just out, just to give more time, take in some more premium and lower our cost basis even more. But in our case, we bought a 41 long put. So we're long from 41 a put to 40. Mm-hmm. So we'll be able to sell that for an extra $100 per contract. Problem is now we're short at 40 and short at 38, but we took in credit by selling a 38 by 37 put credit spread. So our average is going to be about 38 and change if we get assigned. But for you needed to get above 40. But like you said, you can roll that if you have to, but you have plenty of time. I like you said, there's nothing to do right now. Just let it shake itself out and see where price is going to ultimately close and start to maybe drift back up.
I've also taken in a lot of credits, guys. I've taken in a lot of credits on Enphase for the short puts and the short calls. So my adjusted cost basis would probably be in that $36 to $37 range. So that's the other thing, right? I know it sounds crazy to take ownership of that many shares, but I'm not really that in the hole here because I sold the short calls as well. That's like a real big teaching moment for you guys whenever you're selling both sides simultaneously, like I do, is people tend to only focus on the side that's being challenged and they act like the other side doesn't exist. You got to also realize that the short calls just paid a shitload of money here. And I took in more credits by lowering the short calls from 55 and 60 to 45. So I locked in a win on the short call side, and nobody can take that win away from me. So now I'm just going to manage the short put side. But the beautiful thing that we have, Uzi, is we have time on our side. When did the chickens come to roost for you guys? Because our expiration date is 59 days out still. So I feel like I really don't have to do anything here for another 2 or 3 weeks, maybe even longer. And then I can add another 30 to 45 days at that point and easily go from 40 to 35. Or if I can find the right situation to go from 40 to 38, depending on the options chain, because Enphase is a little bit weird, right? How it does $5 increments on certain expiration dates. Mm-hmm. So I would feel a lot better if I could get from 40 to 35, but it's not necessary. I'd be okay going from 40 to 39, 40 to 38, and letting the information come in, because I think that's what I've learned as being a full-time wheeler going on 5 years now is I don't like to overcorrect, if that makes sense. Have you ever gone bowling, Uzi? And it's like you make one little adjustment over here and it makes a real big difference by the time the ball gets to the pins.
Yeah. I know what you're saying. And you wind up creating now another problem you didn't have before.
Yeah, it's like, I grew up on a ranch, so you learn how to tow. You learn how to tow a trailer. So whenever you're reversing a trailer, everything's counterintuitive because you have to turn the steering wheel to the opposite side that you want to go. But whenever things aren't going right, in order to avoid a jackknife, you want to do very small corrections. If not, shit's going to go sideways really, really quickly, and it produces what's called the jackknife. Well, that to me is the art of managing a trade and managing a short put and a short call is make small corrections. Don't overcorrect because you can potentially cause a different problem. What do I mean by that? What if I will roll the short call from 60 and 55 to say 40? And then all of a sudden, Enphase, it's like, oh, that was an overreaction. Or, oh, you know what? They're going to readjust the bill because they're still tweaking the bill. And then now it shoots back up to like 46, 47 or something crazy. Now I have to go deal with that problem again. And the only person or the only people winning here is Tasty Trade and all the fees, right? From me having to constantly correct these trades. So just a little words of wisdom from somebody who's been in these situations more times than I wish that I had been. But that's how you learn, right? Is getting into these situations over and over. You realize, okay, there's 59 days on the clock. I don't really run the risk of early assignment here. There's still quite a bit of extrinsic value.
Correct.
And then two things can't be true. The 40s can't be under pressure while the 45s are under pressure at the same time. So I can't act like the credits didn't exist on the 45s. That's going to help me lower the adjusted cost basis. So it makes it more appealing to potentially take ownership of Enphase at these levels. So anyway, that's all that I got to say about Enphase. What about you, Uzi? When are y'all's expiration dates on the plays that you're in?
We've got until the 27th. So right now there's nothing to do except we're going to close that put debit spread, which is the 41.40. We'll be closing that for as close to $1 full profit as possible. That'll get locked in as profit. And then we'll start to deal as we get closer to expiration on if I'm going to roll it or, I don't really want to take assignments, so I'm going to probably roll it. So unless there's an early assignment, which I don't foresee either, because they had plenty of extrinsic value right now, and I do think this was just an overreaction itself. I just think they took it out to the woodshed. They wanted to maybe gather up some shares for themselves, shake everyone out, and then what we do want to see though is we want to get over that. I guess just if you can see it here, you want to get over that about 37 and change level. Let's call it 37. I want to see it get over 37, and then it can start to get closer to the strikes that you and I both have, to deal with. But right now it's in no man's land. But I think we're going to be fine, and I do think it's it's going to be one of those things where it's an overreaction sell, and it'll start to drift it back up. I mean, if you look at previous history, every time it gaps down, it goes right back up. It gaps down, it goes right back up. Comes down hard, goes back up. So I'm not trying to say, with rosy glasses that, hey, this is going to be fine, like it's no big deal. But it's got a history and it's got a habit. It's got habits. And, that's the thing about stocks. A lot of times, if you can see every time it gets sold off hard, it does a nice size balance. And sometimes it likes to get right back into a previous channel. So the first hurdle is this trend line here, about 37. And then it'll work its way toward this previous longer term trend line, which would more than well cover both of our strikes, short strikes.
There's earnings on 7/22, so I think that is something that is going to be very telling as well. I definitely is something that I'll tune into.
Agree, 100%.
I have not tuned into the last 3 earnings calls for Enphase. So
right.
This is so now my homework begins. Is I'm going to go find the last earnings call to get really, really up to speed, and then I'll be very attentive on this next earnings call to see what management has to say. If they're like, hey, we feel like our stock's good, we're going to be buying back a bunch of shares and all that stuff, that's going to instill a vote of confidence. You know what I mean? So I'm going to be looking for all of those things. So the technicals are one thing, but at the end of the day, I'm a fundamental. I'm a fundamentalist. So I got to, because those numbers, they represent a company, right? There's a company under all of this stuff. So I want to see what's going on with the company. I feel like if you're going to invest in the stock, it would behoove you to learn what's going on with the company. And now we have ChatGPT, we got what is it, Perplexity, there's a Gemini, there's I like Grok personally, and you can get a lot of information very, very quickly. So probably be a good idea to do so. Anyway, let's move on to the next one. Let me remove this real quickly. Let's go back to let's go to the next one, and the next one is going to be Palantir. So let me get over here and let's talk about Palantir. So what's going on with Palantir? I mean, this one's kind of on easy street for us, guys. We got the 120 puts, and then we got the 150 calls, and it's kind of in that sweet spot. I've gone from 110 to 115, took in more credits on the puts, and I went from 115 to 120, took more credits in for the puts. Why did I do that? Because the pressure was to the upside, so the deltas were getting higher on the 150 calls. So I need to make sure that the deltas are kind of offsetting each other. That way we don't just keep looking at a bunch of daily losses on the P&L for the day. So slightly down is good for our position in particular. But really what I'm looking at here is I always go to the far right next to cap requirements. You guys are going to see this little circle with the little middle. That's called theta. So what I'm looking at is all things being equal, the IV stays the same, the price stays the same, collecting $11,400 for being in this trade. So I'm like, okay, well, what's that 10 days from now? Because 21 days to expiration, that's when all the magic happens with Tasty Trade. Like, collect another 100 grand, right? Like, a little bit better than 100 grand, 110 grand, 111 grand, just for being in this trade. If Palantir were to stay exactly where it is, and we don't have a spike in implied volatility. Because the other thing that is killing us on Enphase is another teaching moment, is the implied volatility rank is now at 81.2. So whenever the IV goes down, some of the blood that you see on the screen will also go away. So it doesn't, price action is not the only thing that can help you here. Is a compression of implied volatility can help you, because right now you're also dealing with volatility expansion, and that hurts you. So that's why it's really, really important to have plenty of buying power, because this didn't even move the needle for us. Like this, even though it's a big position, it just didn't move the needle, because the buying power went from like 3.1 million to like 2.9 million. I was like, okay, so this is kind of a nothing burger for us right now. We just got to manage this. And I'm also okay being in this strangle for the next couple, 2 or 3 years if I need to, and inching my way down to eventually manufacture the win. But over here on Palantir, I feel like we look pretty good. 120, 150. I know this thing's been as high as like, I think 142 or 144 here recently.
144, 86.
But I have just not even been tempted to do anything with the short call. I want to stay in this trade for at least another 10 days. And then at that point, I want to make a decision as to whether or not I want to take the trade off completely, because we're already up year to date $183,000 on Palantir. Haven't had to own a share since Tasty, but I got in this thing to make $500,000. So I don't want to cower now. You follow me? But I also know that earnings are on 8.4, according to what's on the screen right there. So I'm like, okay, so how would I want to play earnings? Because July the 18th, if I could just stay in this thing, if I believe that it could stay in these channels, and that's why Uzi is so valuable to us right now, is you got to get an idea of what are the chances of it staying in the channel, because the out of the money percentage is 80 on the put and 69 on the call. Those are pretty good percentages. You know what I mean? I liked it better when it was at 110, but I needed to get those credits in case if if I decide to try to ride this out, I can remember, hey, you got a bunch of those credits going from 110 to 115, 115 to 120. Why don't you give yourself a little breathing room and just go from 150 to 155 for a debit? And now you can potentially write out the rest of the trade depending on what the charts say. So Uzi, I wanted to turn it on to you. What do the charts say? Because according to this thing, our out of the money percentage is 80 on the put and 69% on the call. There's still a lot of extrinsic value left on this trade, right? $365,000. And I'm inclined to want to go grab all of it. I'm feeling very, very greedy this morning.
Agreed. Well, Michael Douglas said greed is good. So what do you? I don't know. We'll see what happens here.
Well, they say, what did they say? Pigs get fed, hogs get slaughtered, or something like that.
Pigs make money. Bulls make money. Bears make money. It's the pigs that get slaughtered. Yep.
There you go. Yeah.
And we've been every single one of those in our life of trading. That's for sure. And if you say you're not, then you're not trading enough, or you're just lying. So
what do we have here?
Palantir is an interesting animal because
It is.
Once it broke out, going back to let's say November of 2024, it broke the heck out, and it's been on a tear, and it's accelerating. It's starting to get a little bit. It has not even gone parabolic yet. So for the shorts, that includes you. Let's say in this case, you have it. Well, yeah. Are you naked? You're not. That's not covered, is it? Right? Is that covered? 150.
I'm sorry.
Do you have share? Is that 150 a covered call, or that's naked?
This is a short strangle.
Okay, good. Short strangle. So you're good. So you're covered. Oh no, just a strangle. Short strangle. Okay. So here's the thing, right? It hasn't even gone parabolic yet, and this is probably one of those names that is going to get a little bit more steep in angle before it starts to cool off. Because what we're noticing here is that it had an ascending triangle most recently. Okay, let me highlight it in yellow so you guys can see it. It's a little bit thicker. But we had an ascending triangle that it broke out of. Basically here and here. It broke out to the upside, and that was a little too thick. Sorry. Here and here. So we had the ascending triangle. Okay. It took its time, tried to get over it, backed off a little bit, went through it, came back, tested it a couple more times, and then it took off. So it took off out of an ascending triangle, which is a bullish pattern. So that makes sense. Then it started to create what's called a little bit of a ascending wedge, where this angle started, this trend line started to angle upward a little bit, keeping the lower trend line. And when you see a rising wedge, those can typically turn into moves where you break through, and then that trend is over, the uptrend is over, and then you kind of see this type of movement like that. So for shorts, the bad news is right now it's still showing strength. It broke above, but it's just doing a back test today. It's down about $2, and it's coming back to this trend line that it just broke out of. Now, here's the thing, right? If it stays above this breakout trend line and starts to go sideways like this, okay, then that 150 would come into play at some point, because it's going to make its move higher and break out. If it breaks back through and comes like this and then tests the lower trend line and starts to now get through the 50-day moving average, now the uptrend would be considered over, and it's going to go into a somewhat of a possible short-term downtrend until it finds a low area. Maybe it would coincide with the 200-day moving average and find support, and then start to round back up. So right now, it's still wildly bullish. Today's just a pullback day. But 150 could come real quick if it starts to move up. Now, also looking at there's no overhead resistance. When you have a stock making all-time highs, obviously there's nothing above to stop it from prior resistance. So in that case, we either use Fibonacci levels, Fibonacci extensions, or you can look at trend lines. Now, top-to-top trend line takes this well above $200. So when I say top-to-top trend line, when you have nothing above, that's when technicians will bring in top-to-top trend lines. And we're looking at, this is where price could start to move upward, definitely over 175 and 150 and heading toward the $200 level in time. And if it does build up some extra steam there's a lot of shorts, I'm sure, in this stock, and if they have to start getting start to cover their position and start chasing this thing, that's when it could start making its ascent toward that level. The angle will start to go up, and then you'll start to get that more of a parabolic angle. Right now, I don't know what this angle is. Maybe you mathematicians out there have a better eye. I'd say this is maybe like a 75-degree angle. 45 is more like this. We're looking at this angle here. So this is more like probably a 75. And, we've seen them go as high as 80 or 90 as far as the parabolic moves. I'm not trying to scare anyone. I'm not trying to say he's going to go parabolic, but it could. This is a stock that could. Okay, but if it doesn't, and if it starts to run into some, not headwinds, because there's really no headwinds, but if it starts to run into some profit taking and maybe some geopolitical or maybe some contract issues for some strange reason, and it starts to break through, and then then the 120 would come into play, and you'd be in much better position to manage that, obviously, than a short that starts to get away from you.
You said something earlier that potentially the shorts would have to cover, and I don't follow this. I don't follow this data that closely, so I'm trying to find it. But last time I looked at it, I feel like Palantir isn't really one of those stocks that is shorted that much.
Good point. I'm going to check it right now and see what the exact level is. Well, this won't be exact.
And I'm trying to find it on Yahoo Finance, but I don't even know where to
go to Finviz, TJ. Go to FINVIZ. They have it. It's there for every stock. Go to FINVIZ, and you just type in the symbol of a stock.
Yeah. So the short percentage of the float. And granted, this is as of 5:30, is only 2%.
Correct. Yep, I just saw that. So that's actually nothing. So now, in the scheme of things, thanks for bringing that up. Hedge funds don't seem to be largely short unless they're not reporting, and that's illegal. So I would probably say it's a little higher, just because there are some entities that don't report it if they can get away with it. But let's call it 5. Even if it's just 5%, that's very low, especially for a stock that keeps going up and making new highs. So that's actually out of the equation to run it up. What you do have, though, is you have a lot of money chasing the stocks that are going up. And
I think what you have is you have to tip your hat to retail investors that got in way before the institutional investors did, and they have diamond handed this thing. Like, I made money with Palantir, right? $500,000, but now I'm chasing the other $500,000 and having to use real big money to do it, right? Whereas people that have just owned, I don't know, just doing the math off the top of my head, call it under 10,000 shares. Nothing super crazy. There's a lot of people that have that kind of money in the Palantirs of the world that they got in at $7, $8, $9, $10, right?
Yeah.
They've made more money just by holding those 7,000, 10,000 shares the entire time. And it's life-changing money for them. And that's all they know. Like, this is the part that is so exciting about the stock market, is one trade, even if it's an accident, even if it's luck, could change your life financially, whether good or bad. In this case, for the good. If you were one of those people that just got excited, whether you saw an interview of Alex Karp like I did, the reason that I actually got in Palantir initially was because I was familiar with Peter Thiel. I didn't even know who Alex Karp was. And then I saw that goofy haired dude. He went to Stanford. My wife went to Stanford. So there was already the connection there and all that stuff, because my wife loves these companies that have Stanford alums in them. That's just one of those things that's our go-to move, right? Like, we always look at what companies have come out of this school. You think of Oregon and then Stanford, and you have Nike, right? This dude named Phil Knight. So you're just you look for those kinds of things, right? And Palantir is one of those companies that the people that founded it, they happened to go to that university, And that's one of the main reasons that we like SoFi, is because it was founded from some kids out of Stanford as well. So I just don't see that. I don't see retail dumping the stock, bro. Like, I feel like they have this idea that they got in it and they're gonna stay in it till like 2030. And they don't give a shit what this thing does. They're gonna hold it because they're so into this cult, if you will, this cultural phenomenon. Not like cult like
Yeah.
David Curtis and me and we're all gonna kill ourselves. Not like that. I'm talking about like a cultural phenomenon. Like, people, they have this need. I believe, again, I'm speculating here, but I feel like they're not going to sell those Palantir shares because now they can't be part of the community, if that makes sense, right? so I just like that. I think that this thing is here. It's going to have staying power like you've probably never seen before. Like, I don't know that there's ever been another stock that was held up and pumped up by retail. The only other stock that I can think of in my career is Tesla, that rivals the Palantir community, and it's bigger than the Palantir community. Is the I call them the Palantards, well, bro, the Tesla maniacs, the Tesla tards. They're even on another level. Like, go on X and start talking shit about Elon Musk, and that Tesla community will go at you, dude, like nothing you've ever seen before. It's insane, and because I'm like the most bearish bull on Tesla. Like, like, okay, like, we're all excited because there's 12 cars that are going to hit the road on the 22nd. When it's supposed to be the 12th, you know what I'm saying? So there's already 10 days that they've extended it to and stuff. But I feel pretty good about 120 and 150. Granted, we're 31 days out, right? I might be singing a different song 10 days from now, but I think that I could gut it out a little bit. Now, after listening to your soliloquy here, Uzi, I feel more confident if I could put maybe a 160 handle on that short call on the next one, because I mean, bro, I just never, and I have seen it, but I'm saying we're prisoners of the moment, right?
Correct. 100%. Good point. We are prisoners of the moment.
It's been a long time. Like, I'm trying to think. I'm trying to remember. I'm 50 years old. Bear with me, right? The mind's not as sharp as it used to be. I can't remember another stock where people were so fucking excited about it.
I mean, there's been a few. I can't off the top of my head remember either. I think there was a medical stock or it's a biotech. You know, biotechs that just get crazy.
Moderna during COVID.
Moderna. Yeah.
During COVID, bro, people made a shitload of money off of Moderna during COVID. But dude, I mean, dude, Palantir, bro, these Palantards, my goodness, dude, like, there is just, they don't hear P ratios, they don't hear. Don't talk to them about a PS, a PEG, none of that shit. It doesn't matter. That's an antiquated, that's an archaic system. They make videos on this shit. I think there's a dude named Amir or something like that. And he'll sit there and he's actually very convincing on why none of this shit matters. And I'm like, no, it kind of does. Because when you're buying into a company, you got to know, what am I paying for the company, right? So, oh, looks like you did something over there, Uzi.
Yeah, I have to make that report out to my members too. Let me get that typed up. But listen, before I do, there's some now. I just know, there is a little conflicting. There's a couple of conflicting things. Price is trending higher. RSI is trending lower. I'm not one of those MACD convergence divergence. I'm sorry, RSI divergent guys, but there are traders out there who see RSI diminishing as price is increasing, so they would be more inclined to say it's going to go lower. But we do have a new MACD cross to the upside, and then we had what's called a TTM squeeze fire. Now that means the price was consolidating and been in a very, very, very tight range. And if we just look above at the same time, we see these red dots. Price was very tight heading toward the apex. And what the apex is when these two trend lines are converging, okay, it's called the apex when you get to that point. If you remember back in math, a triangle. So as it got closer and closer to the apex, it was very, very tight. and then it fired. And when it fired, it went green, which means it broke out to the upside. So you got more things in favor of this price going higher. The only one that's suggesting that it might trend lower or drift lower now is the RSI divergence. But again, I don't really subscribe to that theory, but I know some of them out there, maybe some members out there, some viewers out there might. But if we do get the up move, TJ, we're going to look at potentially the 161 fib extension, and that would bring it to about 163. So you're right. The sooner that you can get this, if price starts to accelerate up, get that to 160. Wait, so you can regroup and let's see what happens with that.
I never thought I was going to move the 110 up. I was trying to go to 100. Remember, I'm thinking in my mind, and I'm still thinking it, all the risk is to the downside, not the upside. When I went into this trade, anytime you take on a trade, there's some sort of an investment thesis that you should theoretically walk in with, right? And when I walked into it, I was like, I think the risk is to the downside. I think at some point people are gonna, sit there and start doing a little bit of basic math and be like, hey, this shit's not just expensive, it's ridiculously expensive. It's whenever you do the scalp tickets, right? Because you want to go to the event so bad and you buy the tickets from the people in the corner. You're like, it says the face value is like $30 and you're paying like $300 for it. Like, I think it's that kind of thing. So, at some point, I feel like logic's going to prevail. I don't know when. And I think that's why those little sayings exist where the market can stay rational longer than you can stay solvent and all that stuff. But that being said, my thesis is really being challenged here because now on the next roll, because we got to keep in mind earnings are August the 4th as well. I've got an expiration date that's before earnings, so that's kind of going in my favor. But it also means that there's going to be an IV expansion at some point the closer that we get to earnings. So I might have to stay in this trade to the bitter end, right? Those are the other things that kind of suck about this whole thing. But if I want to hold the trade through earnings or roll past earnings, I definitely think I would be a lot more comfortable instead of staying at 150. Because the last time I rolled, I stayed at 150. I think I'd be a lot more comfortable rolling to 160 to give myself just a little bit more wiggle room, because who knows, dude? Like who knows with Palantir? It is just absolutely amazing. People aren't even hearing anything, they're not hearing any type of math that doesn't support the fact. And in their mind, it's a fact. And mine too. I'm in this camp right here. I think that Palantir is $1 trillion company in the making. I just don't know what it looks like getting there. You know what I mean? Because it's already way ahead of its skis. So this thing's already like 5 years ahead of where I thought it would be. You follow me? So it's real tough for me as far as from a valuation perspective. But I think there's a lot of people holding Palantir right now, and they're like, hey, this thing's going to $1 trillion. I don't give a shit. I'm holding on. I won't even consider selling these shares until it's $1 trillion valuation as a company. And what does that look like? I don't know, fucking $300, $400, $500 a share for all that, right? You got to go do the math real quick. It's pretty astonishing, man. This is one of those stocks that is just absolutely mind-boggling for me personally, because I've always believed that fundamentals matter at some point.
I just wanted to bring up while you're talking there, like another, let's say a stock, it's not the same category, but I think this is Raytheon RTX. I think it's the old Raytheon. It's a defense contractor.
Sure.
They make they make stuff for the military. I'm just looking to see what the price is there, 148. Not necessarily the price, but how it's. And again, this is a different animal. This is not a Palantir, but you can see when a company deals with, let's say, the government and defense, it can definitely move. I mean, this one was down to like the $70 range. It's doubled in the last year and a half, 2 years maybe. And I know this is not the same as Palantir, but those defense and military type of related companies, even if it's just software or if it's software and products, They definitely and you know the other thing about Palantir is it just went through a cup and handle pattern pullback. So this has gotten a lot of the weak hands out during this whole dip. And when I say weak, you know, the ones that wanted to take profits off the table and the ones that got shook out. But the bulls, the diamond hands, the new investors, new money, whatever you want to call it, got priced back up. It created that handle and it's breaking out of that handle. So this is a beautiful bullish look. I know we've spoken about Palantir in the past few episodes. It's nothing but bullish, nothing but bullish.
Yeah.
Agreed. Can you pull up? I've got 15 more minutes. Y'all want to do SoFi or y'all want to do Tesla? Which one's easier for you, Uzi?
By the way, I just wanted to say, you know, that trade that we got out of was one of those unusual option activity trades we've been in probably for a week. We put the trade on for a credit and we just sold it for another credit. So, you know, that's what we're up to. We're doing some different types of trades and having some fun with that. Up to me, I'll say Tesla. I mean, Tesla is the one that everyone wants to talk about, and that's an alert because we have BBAI, which is making a move today. TG, you ever trade BBAI?
No, there's a Mr. G from the chat. He's the one that put me onto it, and I was too lazy to look at it.
Yeah. We've got some calls working there too.
So Tesla, at the puts at 300, the calls 59 days from now at 420, and then 213 days out. So the beginning of next year, 250 of those contracts at 470. Those are short calls, but it's not like totally naked because I do have 500 leaps at 450 for January of 2027. So I don't own any shares here, but we do own a bunch of leaps on Tesla. Extremely bullish on Tesla long term, but short term, I would say that I'm more in the bearish camp on Tesla. Again, another company that's totally gotten ahead of its skis. I'm just as excited as everybody else as far as robo-taxi and stuff, but I'm also like, I mean, it's not like it's going to make any money tomorrow. And then they talk about, like, Kathy Woods will say, like, it's going to add $1 trillion or whatever $1 trillion to the TAM of Tesla. And I'm just like, if I had the market cap of like Uber and Lyft, like you don't even get anywhere close. So I don't understand where people get all of these numbers, but maybe they're looking at all of these countries. I have no idea. Like I can't even do the Kathy Wood math doesn't math to me. You know what I mean? I would love for Tesla to go to $2,600 a share, especially if it could do it like really, really soon, because those 500 leaps would absolutely fucking print. But I don't see it. I'm real bullish on Tesla, but the year that I'm really, really bullish on Tesla is more like 2029, 2030, where I feel like all the verticals finally come together. We really, really see that they've solved full self-driving. We really see these Optimus things that are starting to get manufactured at scale. We've been waiting on this semi truck for a handful of years now. Remember, we waited on the Cybertruck for a long time. We're still waiting on that $20,000 car. Some people are like, oh, it's just going to be Cybercab. There's a lot of stuff. Like Tesla's trying to do a lot of big things, and it's hard to do a lot of those big things at once. So we'll see what happens. What's the chart say, Uzi? I feel pretty good about these, by the way. These 420s are 59 days from now, and I essentially thought the chart was breaking down. If it went under 295, I thought it was going to be no bueno. So I was like, well, I'm going to go, instead of buying puts, because then it's like I had to pay premium, I'm going to go sell those naked calls over there at 420 and call life good. If I lose 20, 30 grand on those naked calls, well, that's probably what I would have paid on puts anyway, right? So that was kind of my thought process behind it.
Yeah. So the last time we spoke, we had Tesla up, and these trend lines.
Hold on, Uzi. Tesla goes to 400 or 300 first. Remember that conversation?
Yeah. Well, I'm getting to that. Yes, I'm getting to that. So from these trend lines and from what we had building here, we had a beautiful pattern, right? 400 looked likelier than 300. And I have to say, the news came out. I forget the news already. I can't remember anything
What do you
anymore.
mean they broke up? Elon, and freaking
No,
Donald
that's what it
Trump.
was, right? The bromance ended. Now, again, we
That
can't.
wasn't in
That's
the
why
bingo card.
news will trump technicals until technicals take over again. But technicals are back in power here now. You won the bet for sure. Okay, but what we have going on here now is so let's just talk about the trend lines for a second, because we were betting on 400 to 300. It broke the trend line and fell right through 300. So you win the bet, right? But what we were looking at back then was it was holding on to this. And I remember saying, if it breaks this trend line, which would be prior support right here, hang on, let me just highlight it, that it's probably going to go lower, and then 300 would come. So the news comes and it hits, boom, it breaks 300. Now this trend line, because trend lines do work, in my humble opinion, they work, and it's back in play. And look what it's doing. It's holding price below. So this trend line is now major short-term major resistance, not major in a sense of 2-year, 3-year resistance. It's the short term, but it's pretty major because price cannot get through it so far. The only thing holding it right now is the 200 and the 50-day moving average. Okay, if it breaks the 200 first, I would have to say it's going to test prior lows, because I don't think if it breaks the 200, I don't think the 50 is going to save it. So if that happens, the 300 would come into play, But again, you can much easier manage the short 300 than the short 420 if it starts to go nuts. But from a technical perspective, this is not only looking bearish, but it's also creating a bear flag. Okay, this is a bear flag here, bear wedge. And these typically resolve to the downside, especially on a thrust like this we just had on the news. Okay, it's probably going to do one of these. First test will be this line here, this area of the lows. And then if that doesn't hold, it's going to get back into this area somewhere over here. Probably create either a fourth bottom, or who knows? I mean, you never know, right? But that would be, if it breaks these levels here, one more, another test of this area here, probably in the 240 range, if I had to guess. But right now it's following technicals pretty well. Once that news did hit, it took it from a beautiful bullish look to now a bearish look.
I agree. That's why I sold an extra 50 short calls last week.
Yeah, I think the 420s are looking.
I was selling 150 short calls, but then I was like, I had just trimmed that short call position, and I was like, now I feel like I'd have to, because I had already gone heavier on Enphase, because Enphase was only sitting at 200 contracts. Now I had already bumped that one up to 500 contracts, because I just decided that I was happy with Enphase at $40, like if it happened, and here we are, right? So I'd already made that bet, so I wasn't able to go as heavy on the Tesla, because I don't like to buy puts, so I'll sell naked calls in lieu of puts, and I'm okay losing a little bit of money on the naked calls, because if my long puts didn't hit, well, I'm guaranteed to lose money over there. So that's just the way that I hedge the downside. Everybody's got to do their own thing. We're all running their own race. Everybody's the CEO of their portfolio. I'm just a guy on YouTube that chronicles my journey so that my son has a footprint, because eventually he'll take over the family business, right? And so he's going to be able to see how I navigated everything. So trust me, this channel isn't for you. It's for him. I don't give a shit what you guys do. Everybody runs their own race. We all push our buttons. We all live with our results. I just chronicle everything so that my son Jeremiah has a footprint on, what stocks I chose to sell puts and calls on, when I rolled, when it made dollars and cents, how I navigated when things went my way, how things didn't go our way. I don't push a fucking course. I don't do any of the stuff. I don't sit there and promote the channel. You don't see me writing a bunch of advertisements every time you log on YouTube, and the three stock picks of the day, or the 3 stocks to buy now, sponsored by the Motley Fool. Like, you're not going to see me do any of that shit. Kraken's been reaching out to me for about a year now, seeing if I want to be like, they can sponsor the channel, and I'm just not interested. Invest with Henry. Tried to buy into my channel a year and a half ago. Not interested. Because you'll see like those people like invest with Corey, invest with Ashley. Those at one point, those are all under the invest with Henry umbrella. And I was like, I'm not interested in invest with TJ. Like, I don't want to do that thing. I'm not trying to get good at YouTube. I'm trying to get good at my craft. And that's, that's my mission. We're all on a different mission, right? So I agree with you, Uzi. I think Tesla is at a very, very pivotal point. And I think 295 is a real big area because that was kind of like the big buy signal, right? Back in the day. Like, what was it, a month or two ago, whenever they got the big buy signal around 295. So I feel like it stands to reason that would be, quote unquote, the big sell signal if it were to go back below 295 and close there, especially on a weekly candle.
Now, the only thing that we might see come to fruition again is we don't know what news could come out. They are doing the taxis, right? The robo taxis. I see some footage of them already. I think it's in Texas, right? They have a bigger range where they're covering a bigger area than the Waymo.
Yeah, in Austin, they have. I think they're rolling out 12 of them. I believe it's 12 that they're rolling out on in a few days, dude. On the 22nd, I believe, of June. And then they're talking about scaling it up pretty quickly thereafter. But that being said, these rides aren't generating any revenue.
Right.
And there's nothing that's going to be substantial for the bottom line. We're probably a year and a half out, 2 years on that. I realize that the market is a forward-looking mechanism, pricing mechanism. But I mean, at the end of the day, it's still not doing anything for the bottom line, and the core business fundamentally has been deteriorating for some time. Like those are just the facts, right? Like, it's like there's a lot of technical traders that are like, the charts, those are the facts. But I'm also looking at the fact that year over year revenue has declined, year over year sales is declining. All of that, the sentiment has definitely declined whenever Trump decided to play politics and, alienate half the world, right? So it's just it's a tough situation from a fundamental perspective on Tesla. But that being said, I'm very bullish on the AI and the robotics narrative. I do believe that they will solve full self-driving as long as the law allows them to do so. Because I can think of so many situations to where, like, how are you going to do that in a driverless car? Because there has to be communication with the guy directing traffic in like a construction zone or like, going through the school zone, where they're just like, doing the whole, like, come this way, no stop, like it's a temporary lane right now. And I just feel like there's just a lot of stuff, man, that it's just driving's hard, bro. Like driving, there's a lot of shit that goes on when you drive that people don't even realize. Like, you don't realize how much autopilot you do already. Whenever you drive a car, it's scary, dude. I want to challenge you. Go take a 10-mile drive on your car, and then I want you to record. I want you to do a voice memo of all of the things that you can remember from that 10-mile drive. You will be amazed how much you don't remember. And this was an exercise that I was challenged with to go watch a movie. I went to go watch a movie, a 90-minute movie. And then the professor at UT was like, okay, I want all y'all to come to the front of the class one by one and tell me everything that you remember from the movie. So I was like in the middle of the pack, and we were able to use the stuff that everybody had done before. And then I was able to add to the stuff that they forgot. And eventually, between like 80 of us in that class, it was a social experiment in a sociology class, we probably got like 10 to 15% of all of the things that went on in a 90-minute movie. We're going through this life on autopilot, bro. So that's why, like, people don't realize I just don't think they really realize how hard it is, like everything that goes into driving. So what Tesla is trying to do, what Waymo's doing and done, even though it's all geofenced or whatever, and mostly right turns and all that stuff for safety reasons, it's hard, bro. Like this technology is nothing easy. So the people that scoff at these companies for even trying, I'm like, what have you done in your life that's noteworthy? You know what I'm saying? Like what have you done in your life that is noteworthy compared to what these companies are trying to do? Like, just tip your hat and be thankful that these companies even exist. I mean, it's crazy to me. People are crazy.
100%. Yeah, we have some geniuses out there that are impacting the world, and definitely the U.S., but the world. I mean, Elon, Palantir guy, I forget his name, the Hood CEO.
Vlad Tenev is the Hood CEO. Alex Karp is Palantir.
Yeah, definitely changing. Even look back at I forget his name again. I'm getting old. I'm forgetting names. I remember when Amazon was just selling books back in the day, back in the late 1990s. Amazon sold books. Okay, now look at where he took it.
Jeff Bezos.
Jeff Bezos, thank you.
Yeah.
I mean, that's an amazing success story there. Yeah, amazing.
Yeah. Remember when there's all, and I wasn't in it, but when they went like $6, and then they did an interview with Jeff Bezos, and he's like, "Well, the company's been performing and all this other stuff." So he's like, "The stock's like never been this low, but
right."
But the company's clicking on all cylinders, right? So
I think he was on a talk show. Like, wasn't he on like Johnny Carson or like what David J. Leno?
Yeah, it wasn't like CNBC the way.
Right, it was a talk show.
He wasn't talking to Jim Cramer.
Right, right. Jim Cramer was short selling stocks back then. He was rating companies and shorting them.
I got to run, dude. I got to do FaceTimes. I appreciate you guys. I'll see if I can do a Wheelers this week. I'll get with you, Uzi. Maybe you can join us. I wanted to do Wheelers on all the gimmies and gotchas on short strangles versus cover strangles, because cover strangles are a lot easier. Or I shall say a lot safer, but they're also a lot more capital intensive. So I just wanted to kind of like go over all the differences, all the gimmies and gotchas between short strangles and covered strangles, and kind of go from there. And then eventually I'm putting together another podcast, if you will, specifically for Wheelers, which will be like Tesla bulls versus Tesla bears. Because I'm very bullish on paper, but like long term, but short term, I'm pretty damn bearish on Tesla, like right now. Like, I think that if there's ever been a sell the news event with Tesla, it's going to be this robo-taxi rollout. So we'll see what happens. But at the same time, I'm just not going to buy puts. You'll probably see me beef up the short call positions and have those print if the long calls are going to get hammered. So anyway, I got to run, man. TJ the Wheel Deal signing off with Uzi Options. As always, may your sky stay blue, stock screen. Peace out. God bless you guys.
Yep. Take care, everybody. Thanks.